Congratulations! You found the Pirls Stock Market Commentary for Sunday, September 13th, 2015. Market breadth. With this past week's market advance, our bull-bear point and figure ratio fell from 0.50 to 0.57, still within bearish territory. The total count of securities in bullish or bearish patterns rose 1% to 2,793. The count of bearish stocks decreased 4%, while the count of stocks in bullish patterns increased 11%. The Pirls PNF Market Breadth Summary Chart shows us a market now 16 consecutive weeks in bearish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the prompts. You may receive a free subscription to the Pirls Stock Market Commentary via email by registering your email address on the commentary page. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 118 points for the second advance in 2 weeks. At a negative 677.84 points, it continues below all 8 tops above plus 100, continues above the August 2015 bottom, has risen above the October 2014 bottom, and continues below 3 of the 5 bottoms below minus 100 in the last 3 years. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in neither accumulation nor distribution mode, with average daily volume lower than the prior week. In the last 2 weeks, the Nasdaq had 1 accumulation day and 2 distribution days. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in neither accumulation nor distribution mode on lower average daily volume. Momentum. The CCI 20 daily in a Woody's downtrend is now at plus 2.61 and is now within the plus or minus 50 range required for a valid zero-line reject short entry signal. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 60 weeks ago, while the daily CCI 20 began a Woody's downtrend 4 weeks ago. The CCI 20 weekly rose to minus 121.33 from last week's minus 223.07 and now has 5 consecutive weeks below zero. Industry rotation, the last 2 weeks, 4 of the top 5 industries are positive and all of the bottom 5 are negative. Bullish, semis continues in the top 5. Gold and silver continues in and leads the bottom 5. REITs has left the bottom 5. Oil services has left the top 5 and entered the bottom 5. Oil has left the top 5. S&P retail and computer hardware have re-entered the top 5. Comp Tech has entered the top 5. Bearish, none. Focus this week from www.zerohedge.com. Dependence on central banks is unrealistic and dangerous, the BIS warns. Highlights follow. There's something terribly ironic about the central bank for central banks telling the world that the market is too dependent upon central banks. Quote from BIS document, "It is unrealistic and dangerous to expect that monetary policy can cure all the global economy's ills." The cryptic conclusion, "All this is reminiscent of the old joke about the stranded tourist who, having asked for directions, was told, 'If I were you, I wouldn't start from here.'" We agree, we think. Santu Pirls comment, "Is the BIS issuing this public warning so they can later say we told you so and position themselves as the savior with centralized authority?" Thank you for tuning in for this week's Santu Pirls Stock Market Commentary, featuring the proprietary bull-bear point and figure ratio market breadth summary chart, compiled weekly by Donald Pearl, www.s2pmarketsignal.com. Hoping that you are enjoying a peaceful and pleasant weekend, that you are looking forward to a productive and prosperous week coming up, and wishing you true success.